Hello traders, here we are, D-Day, UK Day, where we might not see me for the rest of ever if the UK blows up under Rachel Reeves' remit and whatever she gets up to today. Yeah, I might be chopping down trees to pay for fuel and yeah, we'll be going back into the Stone Age come 1 o'clock this afternoon, depending on what she trots out. I jest, of course, but I'm not hopeful for any positive outcomes, but we'll get into all that in a little while. We're also going to go over those charts we went through yesterday, see what happened, see if money was to be made or how prices reacted, and we'll have a little look at that shortly. Right, let's get through the headlines first. Let's get rid of my ugly mug first. There we go, gone. Bank of Japan's Ueda says Japan's economy is recovering moderately and likely to grow above potential. Also expects underlying inflation to accelerate gradually. And a little bit, again, I wasn't sure whether this was something or not. The last couple of days, the little language change, it could just be a translation thing, but he seems to have gone backwards a little bit. He says we will keep raising rates if the economic outlook is met. Okay, that's from prior comments earlier this week that they would look to hike if it was likely their outlook is met. As I say, I'm not going to get too tied up in the language, as I say, translation, and you know, these guys can change a bit between different appearances, but anyway, it sounds like a little bit of a dial down from what we got earlier this week. It says food price rise will likely moderate going forward. Underlying price trend is still below 2%. It's desirable for the price trend to rise a little more. Underlying inflation is near target, but not yet within the defined 2% band. It does say, though, that a 3% wage hike roughly matches a 2% inflation target. So when we get those final numbers, wage numbers, over the next few days, early April, it could be a bit of a trigger if they are above 3%. So that's at least the line in the sand for the BOJ. We've had new BOJ board member Koida speaking, and she says she sees positive steps in wages and inflation. Some effects of monetary policy steps appear with a lag, so she wants to scrutinise how policy decisions so far could affect the economy. Overall, nothing really to take from her in terms of the Dove-Hawk scale and where she sits. Pretty much standard BOJ affair. Lots of caution, lots of waiting, lots of seeing what happens. So no real slant from those comments as to how she might lean in policy meetings. A bit of politics in Japan as well. LDP Bod Katayama says we will propose policies to encourage investment in domestic stocks under a tax-free scheme. This is a plan they've been working on for quite some time, almost like a sort of ISA that we get here in the UK, tax-free savings schemes that you probably get elsewhere. They're going to push forward to that. Says that the yen's real value is seen around 120 to 130 per dollar versus where it's at now at 150. So it gives you an idea of where they see the rate. They would like the rate to be. Doesn't mean they're going to do anything to get it there, but that's how they base a lot of their forecasts and whatnot off. ECB's Villeroy says the market view of 2% rate in the summer is a possible scenario. ECB and Bank of Italy Bod Pancetta says ECB must remain pragmatic in setting rates. A bit of data out overnight and this morning. We've had inflation from Australia. CPI over there for February coming in at 2.4%. from 2.5 expected and previously year on year. They've also got a trimmed mean number which dropped a pip to 2.7% from 2.8%, so a nudge down in inflation there. A bit of relief for Mr. Bailey at the Bank of England and his motley crew, because CPI came in lower than expected this morning. Core CPI, as you can see there, 3.5%. So 2 pips off last month. Headline CPI also 2 pips down to 2.8% was expected unchanged. Pretty much a lot of red in those numbers there. RPI as well coming down. Retail price index, PPI as well coming down. Also, no idea why it's not on that calendar. Who knows what's on this calendar these days. Anyway, so a bit of inflation easing in the UK, which doesn't mean the BOE are going to rush to cut rates again, but they want it going the right way, as will the Chancellor, who's got to do her thing later on. After that data, the market ramping up their idea of the May cut, now running at an 80% chance of seeing a cut starting then. No doubt we'll get everyone changing their forecast, all the banks changing their forecasts that they all changed 5 minutes ago. You know what they're like. US data yesterday, a few wobbles, shall we say. Firstly was the Philly Fed Services Index, which is not on calendars. Still don't know why it's not on any calendars, but it's not. Anyway, that came in down 32.5 from a prior down 13.1. So a big hefty drop in that services number. Bit of counter to what we've seen in the PMIs. The US PMI, you'll recall, saw manufacturing down, but a big jump in services. This one's going the other way. It's a regional survey, so you're going to expect these divergences here and there. Anyway, employment fell to -7.5 from +2.5, so negative move there. Prices paid jumped to 36 from 23.4, so inflation price pressures still evident there as well. New orders, a lot of damage there, down 19.5 from a prior -1.3, and capex, which is investment, also fell. So a lot of that's underlying details. Again, it's all lining up with other surveys, higher price pressures, weaker on employment, and things like investment. So those things are all lining up. Consumer confidence was out after that, and that was another negative, 92.9 from 94 expected, and a prior 98.3, which, as Mark in our chat room pointed out, prior number got revised up for the 8-month on the trot. So that 98.3 got revised to 100.1, which makes the drop even bigger, even though you counter that with a rise of last month. Irrespective of that, current conditions also softened, 134.5 versus 136.5. Expectations dropped as well, 65.2 from 72.9. And that all-important 1-year inflation expectations jumped again to 6.2%. It was 6% last month, but that got revised down as well to 5.8%. So if you look at the string from January, it was 5.2, jumped to 5.8, and now up to 6.2. So these inflation expectations really picking up now. And I don't know how long the Fed heads are going to continue to ignore such things. New home sales also out, a slight miss of expectations there, but up on last month, so nothing to worry about there. Median sale prices, they were down 1.5% from this time last year, and this is January data, although they were up 3.7% over last month. So we'll just keep an eye on that year-on-year number in house prices just to see if there's anything coming in. But that's the bulk of the housing data for February through now, and there's no yellow flags being waved in that sector at least. Fed's Kugler sees current Fed policy is still restrictive, judges that policy is well positioned, says the latest economic data for early this year has shown some sign of softness. He's paying close attention to the acceleration of price increases and higher inflation expectations. So we've got at least one central banker who's keeping an eye on the sentiment data. More dialing down of this tariff stuff. Trump is apparently considering a 2-step tariff regime on his April 2nd deadline, according to reports. Then he was out later saying there's not too many exceptions on those April 2nd tariffs. Canada might not get as much as what they thought they might get as well. So we've seen the loonie strengthening a bit on the back of that. Mexico, Scheinbaum's been on the phone to whoever will listen. Mexico's finance minister or economic minister Ebrard is clocking up the air miles again. He's going to Washington today for more trade talks. So still lots of deals trying to be done ahead of the deadline. We've had a bit of a confirmation, if you can call it that we've got a truce of some sort going on in between Ukraine and Russia. They've agreed on the safe navigation in the Black Sea, and they've agreed again to implement a ban on attacking energy facilities. The Kremlin reported that Moscow agreed to ensure safe navigation in the Black Sea, and that wants the US to help restore access to global markets for Russia's agriculture and fertilizer exports. And a lot of the conditions depends on lifting some sanction restrictions on financial organisations, and that sanctions should also be lifted on firms producing and exporting food and fertilizers, and lifting sanctions on ships. So as usual, a lot of conditions attached with that. Trump came out afterwards and said a lot of progress has been made on Ukraine, Russia and the Middle East. You won't be surprised to hear that already overnight, both sides claiming that each other has attacked or has hit energy infrastructure, even though we've apparently still got a 30-day ceasefire going on. So it's all going to be a complete mess going forward, and everyone's going to play the blame game to try and get around it. But we've got some semblance. We're a step further to maybe sorting something out, as messy as though it may be. Right, that's all it from the headline front, because I want to get stuck into what's going on today. Quick look, see what data we've got coming out. We've got NBA numbers, so I'll be keeping an eye on that one. Just half a glance. Durable goods in the US. Again, I'm going to look into the details and see what the more consumer-related goods orders are like, things like white goods and whatnot. But that's about it on the data front for the US, at least. So we're going to be in a headline-driven market once again. Right, over to what's going on in the UK, just to give you the rundown and timeline for this Reeves thing. So Prime Minister's question times start around 12 o'clock here, 10 past 12. So just over an hour and 20 minutes odd. Okay, so we get PMQs to kick us off, and once that's all done and dusted, it will shift over to Rachel Reeves. I'll put some links up in the chat room if you feel pained enough that you want to watch that. Question time is always a good pantomime watch anyway. Now, for the majority of you people, traders, particularly those not from the UK, the super nuts of what comes out in this statement is not going to be anything that is going to grab your attention in terms of trading. Okay, we pretty much know what's coming, because as usual, it all gets dropped in various leaks and whatever, sort of like a litmus test. Well, it does two things. It's all like a litmus test to see how markets react to that news, but it also is a way of getting the bad news out in the open early, so then there's not so much of a shock when it's confirmed. This is all political spin stuff that happens with these things, but it's what we don't know that now becomes a big risk for this, and also what the market does with all the news afterwards. That's the bit we don't know. That's the bit we're waiting for. It's still a big risk event for the pound, but you know, there's also the possibility that the market goes, bothered, don't care. We know what it is now, and nothing happens. Okay, but as I live by, you plan for the worst, and everything else is a bonus. So that's how it's going to drop. So it's not something you're probably going to be able to trade, you know, each headline as it drops. If this tax gets hiked or this welfare bit gets cut and this department loses money. So it's not going to be like that. So we're all going to have to wait to see what the reaction is after. We do have a 7-year gilt auction tomorrow, which might be the first big indication of whether the market isn't liking what it's getting, but we probably should know before that anyway. What also drops is the budget forecast, which is run by the supposedly independent Office for Budget Responsibility. They come out with their forecasts. They pretty much scorecard Reeves's plans and say whether it's sustainable or not, or whether she's going to be going over limits and all that sort of stuff. So the market is going to make its first move probably on that side of things. Growth is expected to be halved, and given the leaks of that, that's probably likely. I'd be surprised if they aren't. And last night, there were reports that the OBR have said that she's looking for 5 billion in savings, if you like, and she's only going to be able to achieve 3.4 billion of those via her measures that she wants to put in place. So she's already in a black hole for 1.6 billion that she'll now have to try and find to make up those 5 billion in savings, which means other areas are going to have to get cut, services and whatnot. So it's all a bit of a mess going in, but you know the times now, from around 12:30 GMT, that's when it all happens, go on for about 45 minutes to an hour, and then the market will make its decision afterwards. So that gives you the rundown for that. Right, let's get stuck into the charts. Let's go right into all that stuff first and see what happened. Where should we start? Let's start with dollar Swiss. Let's come into a bit of a short-term lines. So what do we get? Not a lot in the end. We haven't really gone anywhere. We've fluffed around between the levels, haven't really gone either side. We're hanging around this 88.30 level. So I know some of you were trying shorts into this and a couple of you were long and whatnot. So probably just a little bit frustrating for some of you that you're not getting any moves. Again, feel free to put in the chat here, update me, update the rest of you guys. You know, how have you been managing your trades? Are you thinking about changing out your trades? You know, if it's not working, getting out, taking what profit there is, or are you happy just to sit in these trades and let them continue because they're not doing anything either good or bad at the moment, but certainly nothing really happening there in the old Swissy. Though we did get that move down to the 88 support in the end yesterday afternoon. So those of you who were looking at shorts, that was the level you needed to watch. If you were long, you wanted to be careful of that level down there. Where's our old mate Ali? He was dicing around in that, if I recall, yesterday. Gold, again, a lot of your levels coming in around where I had levels as well. So what happened yesterday? So we had a little bit of a spike in the afternoon, did manage to poke its nose above this 33 level a lot of people looking at, but it couldn't get up to the next level around the 38s. We've had the pullback, came back down to this sort of, again, another support area some of you have been looking at early this morning, bounce from there. So we're doing a bit of range in between the lines. This 23 level is just becoming a bit washed out at the moment. So move that into a sort of pivot level more than anything, but it looks like we're doing a bit of consolidating for the moment. Have we broken this series of lower highs? Yes, we have. Does it mean we're going to start changing to a more uptrend? Possibly. It's looking like it is, but that move here today or earlier this morning, not taking out that high, just makes it still a little bit on the weak side, shall we say. It keeps the bearish poise. If we're moving above 33, then, you know, that might be changing the complexion. But otherwise, you know, we've got this downtrend. This might just be a little bit of a pause before continuation. But watch the support levels. We said 3K is the big one. and that remains the case. So we've had a step up to 310. Be wary if that breaks down once again. Let's look at the FTSE, which we know Catherine was dabbling in yesterday on the short side. So we did get a move up through the 87 level. It looked like it was trying to go, but it didn't hold on in the end. We still look like we're in a bit of a rally sell mode for now, at least around this 87 level. So I hope Catherine's in and she's made plenty of pips on that one, at least down to those lows there. But again, not really anything to report. A lot of sideways action going on over the last few days after we had all the moves up to these highs. So we're not giving it all up. Probably should stick a fib on here. But yeah, it's a bit of indecision at the moment. We can't seem to hold moves higher. But we can't quite push down to some of these support areas down below. So range trading looks like the way forward from here. Nice one, Catherine. 41 pips in the bank. Like to see it. Kiwi. We've had this it's sort of been a bit risk on, a bit tariff related, you know, to do with Trump, a bit dollar weakness related, but the picture's a bit mixed around some of the pairs at the moment. But the Kiwi, yesterday, what were we doing? We were knocking down around here yesterday, around, well, where were we? Round about in here when we were doing the show yesterday. So we had a move down. Some of you flagged this 57.20 area, which it did go through for the sake of 7-8 pips odd. But it pulled up just ahead of that next level, 57.10. So this is I know this is Gavin's zone down here, but it wasn't the only one to highlight that 57.10 area, just coming ahead of that big figure. So a nice hold down there. It's giving it the springboard to take it back up, and we might be getting a look up towards this 57.70 area. So again, a bit of range trading going on here. So good trading if you've been pinging either side of that one. It shows your levels are working. It's showing things are going nicely for that. Did we look at euro yen? I don't think we did in the end. Did we look at euro dollar? Yeah, we looked at euro dollar. And again, I had this 107.60 area, which I had a bid in against yesterday. We didn't quite get down there. This is a little bit concerning. Okay, first and foremost, and I'll go to my charts in a minute. What was really significant is that we held pretty much to the pip, the 1830 up here yesterday. And I've been talking about that level in all conversations. That was a pretty strong signal that we're in a bearish mood now, shall we say. Okay, but we're knocking around this 77, 78 area. Okay, now this, you've got to be careful with things like that because, yeah, it might be a bit of a level around here. My bigger level is this 107.60. Okay, but when you see a price not quite getting down to a level that you are looking at, but getting close to it, you've got to be very careful, because what it often means is that anyone who was long from around here before or is looking at that level as a bit of a line for them is parking the bus just ahead of it. Okay, so if you get a break of this level, this potentially becomes the real level, because if that goes, then there's a good chance that the one you are waiting for is going to get taken out as well. Okay, so this is important price action to watch, as I say, when you've got a level that you're interested in, but the price can't quite get to it, and it can't quite get to it for quite a few days or a few sessions. Okay, because it's really close. If that goes, there's a strong possibility that that level goes after. Okay, so I'm not as keen. In fact, I had some bids in there, 65, and I've pulled those today because I wouldn't like it if we break this level. I wouldn't trust this level to now hold. I would have traded it yesterday. I'm not so keen on trading it today. Doesn't mean it is going to get flushed. We may still bounce from there, but I'm looking at the risks to the trade and my experience of watching this sort of price action. So, yeah, it might be a bit of a zone brand. You know, if you're looking to go long, then this is, you could still go long around here, call it 80s, and you have a stop below the 60. So it is still potentially tradable, but I wasn't initially looking to trade 80s. I was looking to trade 60s, and we haven't quite got there. So I'm a bit more cautious for that. What's the significance of you talking about the 107.60 main king? And for that, well, it might be easier to show it on this clear chart. So let me make it a fat one. And then if I ping it to here, so let me get rid of that. So here's, I'll just get rid of that level there, just so I know. So here's the 107.60. Why is it important? Okay, we've already had, this is a daily chart, so we've already had a hold back there 6th of March after we got the break. So we broke through and held it. Okay, action here, getting into action here, action here, action here, action here, bit messy through here, action here, action here, action here. You know, I'm into 2023 now. Action here, action here. 2022 now. You get the picture, okay? 2020, we're getting a lot of action around this level, okay? This is one of those levels that I always have on my chart, okay? So that's why it's a significant level. It's one of those levels, it can have an effect in the short term, but it's one of those levels that if you've been away from it for a long time, when you come to it, then you can damn as sure think that you're going to get a bit of a reaction there. Same thing here. We broke up at it early March. Now we've spent a month, nearly a month above it, and we're coming back to it. And it's important, particularly also for the state of this rally up from the 105s. So that's why it's an important level there, main king. Right, so just go off those charts. I'll go back into this, and again, and I'll show you what I was talking about in that euro dollar and that 107.60, because this is something I did in euro sterling yesterday. I had a bid in just ahead of this level here. I've got a level here, 183.40, call it. Okay, so I'm already long. I wanted to add on a dip, so I put a bid in at 83.45. Okay, but I've already seen once that we'd had support at 50. We did have this little mooch below. This was before I got my orders in. Then we had support at 50, support at 50, support at 50, support at 50. So although I'm bid just ahead of this level, because I never usually put my orders in bang on the level in case we don't get there. So I had a bid in at 45, but I'm looking at this 50 level thinking the same thing as I've just explained with euro dollar. When you get the price and it can't quite get down to where you want it to go, okay, when it does break, it's likely to then go on and take out your level, okay, which is exactly what it did yesterday. So I pulled my 45 order. I ended up paying 35s for it. Okay, I saved myself 10 pips. Okay, now it wasn't a big, huge move. It didn't rush through. It didn't drop 50 pips after this level broke. It did what euro sterling does, which is it crept through, but it broke where I would have had my bid. Okay, and it kept going pretty much nearly down to 30s, and then it even resisted up at 40 again, and then CPI data this morning, and it's a different picture. Okay, but that's the price action I'm trying to explain in euro dollar at that 107.70-80 level, when I've got a level at 60. Same thing here. Got a level at 40, but 50 has shown it to be where the bus is parked, and then I'm not so keen to pay 45, so instead I paid 35s. So as I say, got myself a 10 pip saving, which, you know, sometimes can make all the difference. As for euro sterling going forward, really, I'm long. I short the pound. It's a trade to ride over Reeves, because I still think on balance there's going to be more bad news than good news, and the market ain't going to like it. But for now, I don't really care what's going to happen in here. I'm only looking at the bigger edges. Okay, so I'm looking down to this zone here, mid to semi-high 82s, and seeing what happens if we get a move up into the 84s whether we get a look at 84, 80, 85, and this is a big old historical zone. Those of you who watch the shows and in the room know I've been traded off this one plenty of times before previously. So stick to the wide edges, and you need to do that if you're trading the pound today. Cable, similar thing. We're not doing an awful lot at the moment, but there's volatility risk for this. And you know, cable, we could go to 131s, 132s, we could go down to 127s. So it's really about forgetting what's going on here. If you're going to want to trade it, then pick your levels that are a bit wider out where the price may run into trouble or where the price may break a big level. And if it breaks a big level, is it going to hold that break? Because then that's going to give you the clue which direction you need to be trading for now. So if we get up to 130, which we've hit our head on a few times, can't get through it, then, you know, at the end of it, then you can potentially rely on that level to hold yet again. Same on the other side. But if we're breaking that, you want to see whether it holds or not. If it doesn't hold, it's just a volatility move, and then we go back to trading whatever. And that is the last thing I'm going to say on the pound today for this event. It's going to move pretty quickly into the rearview mirror. So we're probably going to get, if we're going to get a reaction, it's going to happen immediately after. It's going to follow through maybe for a session, 2 sessions, a couple of days while the market sorts itself out, gets repositioned or whatever. Then it's all going to go into the past and we get back to trading anything else. So obviously if you're trading cable, then we've obviously got the big pull of what's happening in the dollar the other side, which may also present an opportunity. So look at what the dollar's doing going in, because what happens in the dollar is going to overrule what happens in the pound 9 times out of 10. Okay, so just look for potential counter trades if the dollar's doing something else in other pairs. Scott, do I pay any mind to FX futures? In what sense? Trading them or using them as an indicator for what spot's going to do? No, I don't really trade futures in that sense. I know a lot of people look at things like the CFTC positioning report, but I'm not a big fan of that in determining you know, what that means for spot prices. There's a whole host of reasons why people are trading futures, hedges, options, all that sort of stuff. So, you know, and the futures market isn't the spot market, and it pales into insignificance in terms of volumes and size. I'm yet to see real times when the futures market is driving what's going on in spot, more likely the other way round. Dimmy, tut, where's your late note? Can't be late to the show, mate. Yes, from 12:30 is when that stuff should start. Mark, we'll have a look at silver. You're long from 33. Let's have a butcher's at silver. I know this is something a lot of other people trade more clearly, like Estelle and Kay. You're long from 33, so you're doing all right on that front. Let's see what we can dig out of this one. Obviously, you're going to be looking up towards these highs here, 34.20-ish. Well, it's going to start, as you know, probably into the 34 figure from that, and you'll be wanting this move to continue at least up to the highs. This is your crunch point, okay, up towards near 35. It would have the potential to set a real strong double top if we can't get through there. So if you're long, I hope you see that level up there, even maybe towards this high. You may want to think about just taking a bit of profit off, just in case we don't go through, and then maybe tighten your stop underneath. Pick your levels below, you know, probably looking at somewhere. Let me get my lines up. You don't want it getting him back below that 32.50, 60 area. 32.67, whatever you want to call it. That's a level, if you're long, you don't want to be getting through there. So I don't know where your stops are now, mate. But if I was long 33, I would be sticking my stop below that. If you bust this high up here, get through 34s, you could then potentially think about bringing your stop up above the level, just locking in the rest if you don't get a bust up through there. So all the best with that trade, Mark. Hope it goes your way, mate. Right, let's have a quick look what else is going on. Dollar CAD is looking a bit interesting this morning. Further easing of tariff tensions for that one. And again, another lesson I want to talk to you about quickly. Those of you in the chat room yesterday might have seen I was looking to buy down here into this bottom of the zone, this support area, 65.70. I just missed it. I was dicking around. I didn't have an order in, which would have missed anyway if I'd have put it at 70, but I faffed around and missed it. And it bounced all the way nicely into the 43s. So nice pips to be made there. But what I did after was pull my order. The reason being, and you know the story, I don't like a price coming back to a level after it's been tested. Okay, so this was a test. That was the move that would have made the money. And then look, we come back really quickly and bosh, then it goes. Okay, this is why you tend to see with a lot of my trading, when I want to trade levels, I'll trade it on a first touch sort of basis rather than a second or third touch basis, because that's a dead cat bounce and we're off and we're breaking and we're coming down. So yeah, that's a little lesson there. I could have made some money on the first time, but I've saved myself by ignoring the trade the second time around. In the meantime, we're looking at this area here, 142.40, which we're already half tapped with these lows at the moment. A break here is going to target this area of price action previously. So down to the low 42s, maybe even to the 141s. But we have to see if it's got the legs to do that. It couldn't even stay long below there, but that was as we then ran into the end of February and into the March tariff deadline. We saw the reaction. I was hoping for a bit of a similar run as we get close to the April deadline, maybe a run higher to get some shorts on, but we couldn't even get there. Headlines not permitting. We've already had the dialing down of this tariff stuff. There is still some risk, okay, because we're not at the deadline, we're not past the deadline, and we don't know exactly yet how easy things are going to be on this tariff front. So there is still risk. So I think it's going to be maybe still a bit of hard work getting down to these lows or trying to get through these lows until we get something concrete. So if you've been short in this one, you've made some money, you got some money on the table, think about locking it in because there is still a risk. Trump turns around and goes, okay, we've eased some tariffs, but here's a ton more you're going to get instead or whatever. And then boom, we're back up at 144 in a blink. So we're not out the woods until we're over that deadline and we know exactly what's coming. Dollar MEX in a similar picture. Again, this is my level here. I did think I missed a break of that one, but we're back up again. It's getting a bit messy now. I'm probably not going to touch it this side of the tariff deadline, month end and quarter end as well in the mix. So I'm going to sit on my hands and see what the outcome is and then react to that. I'm still short, so I'm not that fussed about the fact I haven't added to that position. But as you can see, we couldn't get down to that 1990s again in this move, and we've had another little bounce. So hand sitting time until I know exactly what's going on with that one. Right, anything else, boys and girls, before we close up for the day? Just trying to look and see what else is going on. We'll look at dollar yen. I haven't looked at dollar yen for a bit. I'm in that position. I really don't know what to make of this one at the moment. You know, 1 minute looked like it's crapping out, the next minute it's bouncing again. Move to the wider levels. I think that's the best way to play this one for now. We still haven't got a proper test on the 38.2 here, the 151s. We've got close to 151, can't get through that. We are keeping this uptrend going though. That is very clear. So it's still working on it. Okay, it's still working off this low. It's still working off this 148 level. It's still working off this 147 level. So short term, it's still looking bullish, even though we're still getting some big old moves, but we're not really changing anything or the wider context until we're busting through this 151.20s area. And if it continues to hold below, but we keep this uptrend, I'm going to start thinking about buy stops through that level, because the price action will just look like it's building up to something. This one, again, it's on and off the yield bus. Sometimes it's moving, sometimes it's not. You know, we had a break up through 434 yesterday in 10s, US 10s, but meanwhile dollar yen was on its lows of the day, down in the low 150s. Now this is below 434 again, and dollar yen's back up again. So it's all a bit of a mixed picture. More likely there's going to be a bit more pull and push coming from Japanese yields and what's going on over there, because we are potentially heading towards another hike. Not that the market's getting all bullish on the yen about it, but the driver at least is might be shifting a bit more to watching what's happening in Japan. Again, month end, quarter end stuff in the mix there too. Dimmy, you want a quick look at Euro Kiwi? Oh, where am I going? Let's have a look. Euro Kiwi. Okay, mind me what you're doing in that one, mate. Back to the breakout level. So you're talking, which breakout level? You're talking the breakdown level, or we've been under this breakout level around the fib here that we've got. Probably stick a line in around there. Let's just take it down. There we go. So this is a bit of an area you got down here, you know, the 187s on the daily. You want me to zoom out? Okay, no problem, sir. Oof, look at all that mess. Shows you the last time I was looking at this stuff. Right, so where are you looking, mate? Because I'm not quite seeing it. Where you're looking at the breakout? You're talking about the break up or the breakdown? You're talking about this level here, give or take. That we've broken above here. Let's go into that. That's what I think you're talking about. You're talking about this roundabout here, yeah? 186.50. Oh, bloody hell, making a right mess of this. 186.50. So around there. Yeah, we may be heading back to there. Bit of a way to go, though. As I say, I'm seeing more stuff around these lows, perhaps, than where you're looking, or with my eyeballs anyway. So this is looking more like a breakdown at the moment if we're holding this area here. But you got these prior lows to take into consideration. But your 86.50, yeah, it's a bit of a break point, that and around this fib here. So yeah, 86.60, 70 perhaps. If you get a move down there, that's where you'd be looking for a potential bounce. But I'll be worried that if we're breaking through these lows and holding below this area, there's a lot more downside to come for that one. Right, let's call that a session for today. Got lots to get through the rest of the day with all this UK crap to be dropped upon us. If you're in our chat room, if you don't understand anything going on with that, then do ping me a message, ask a question, and we'll get that answered as best we can. I will have a couple of guests coming in tomorrow. Mr. Brown, Michael Brown, my old mucker, and my other namesake, Ryan from Peak Suite, will be coming in, and no doubt we'll all be moaning about what's happened with Reeves today. And then on Friday, I've got my other good pal, Harry from Live Squawk, coming in as well to give us his views as well. So a couple of guests to end the week with tomorrow and Friday. So do join us again tomorrow. Have a great day, everybody. Thanks a lot. See you later.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.